Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Friday, and if you haven't heard, and I'm sure you saw all over the media, this was the best week since, I think, January. With that said, you know what? I personally don't think it was the easiest week to trade as an active trader. As an investor, you're probably happy, things bounced back. As someone that I guess looks at their statements over the weekend, you'll be excited, which is why everyone has a macro plan. But to me, it was just a little bit difficult, the last few sessions because, anytime you're up 8 out of 10 sessions, it makes it a little difficult. Anytime everyone in the world was calling for a 1987 correction or a crash or 2008, you get a little bit skeptical, so you don't want to put that much risk on. But ultimately, when you take away all of the noise, not a lot has changed. So if you take away the noise and you just look at the charts and you try and see if whether or not composure has changed, we already went to it. You could see that it really hasn't, right? Let's go back and look at some trends. Okay, the two different trends here. First of all, this was the low. Look at this nice little red dog reversal that happened in November. From there, got tested right here. What did it do? It held the 100-day after giving you some spot to put some risk off, after breaking the 50-day, giving you some downside follow-through, which has been very hard to find, and then giving you another move. We talked about this head and shoulders top pattern, take risk off here at 1685, get a little short here based on a move lower. The move lower really only equated to a move down to this area. Then what did we do? We hugged, big old hug of the trend line. And then if you take a closer look here, you'll see that, not knowing what could happen, could have broke through, it could have, been different, but what was it? Not different. We reclaimed this moving average and broke above this area, filled this gap, so it then showed you that this gap to the downside no longer controlled the tape. Gaps that are unfilled typically control the next move. Gaps that get filled negates the power. That's what happened right there. Then a little bit further into this move, you had the reclamation, or we reclaimed the 50-day, and that was a spot for adjustments. And now look what's going on. We've been posting the chart every day. Big gap up here, holding it, letting the 8 and 21 day and the 50-day and everything catch up, and digesting higher. Yes, would even the bulls have liked a little bit of a controlled pullback? Yeah, but it didn't happen. So with this sideways digestion, what that does is it keeps shorts rolled up and pent up and worried, and guys that might have taken some profits along the way or waiting for more data thinking they might have to start getting more involved if we were to take out this little high here of 169.58 for a potential move through 2013 highs, which is not even a stone throw away, but more of a pebble throw away. So with that being said, sometimes the environment's a little bit more, if you come back to me, conducive for traders. Sometimes it's conducive for buy-only mutual funds or buy-only macro investors, or sometimes for stock pickers. Right now we're in this little spot where it's a little hard for active guys because you feel like you don't want to get caught here, but if you short something, it doesn't necessarily work. But if you're long and you buy something after it moves, you probably ruin your cost average and there's not much momentum. And we as momentum traders like to buy high and sell higher, which is just one of our techniques. We use a lot of them. So with that said, I'm just going to roll through, it's Friday, 15 to 25 names to see if anything has changed and what potential we could look for next week. So I'm going to quickly go through the financials, go through some sectors, and it's been a long week, so you'll have to deal with me. First things first, let's go with the XLF. XLF was a sector that held the trend line here, broke below it, reclaimed it, has a gap, not at the highs of the year, not showing blaring relative strength, but holding up pretty darn well. Okay, within the XLF, Morgan Stanley is hovering above prior highs, acting better than it's acted in a while. So this has shown some, more intermediate term leadership. We'll see if we can break above this for continuation next week. Goldman Sachs, also this usually leads the way. As you can see, based on where I just showed you Morgan Stanley was, it is not at 2013 highs, but it's hovering, looks okay, could break above this and make new highs at any moment, still has its gap here, looks pretty damn good. this trend is still intact. Yes, it seems like it broke a little bit below it, but reclaimed it, a little choppy. Bank of America, a little bit out of play, but overall, you can't really read too much into it. It's been in a really, really strong trend. You want to draw your little line here. Recently, this is another trend line, just hasn't been able to break out. Maybe there's some selling pressure that it's leaving the Dow, which I don't really understand, but let it do that. It's fine. Once it gets through that, I do think that it's only a matter of time before it takes out this high here. As far as some tech, let's go through tech. First name we'll talk about is Apple. Okay, so if you come back to me, you'll know that for the last few days, I've pretty much been on the sideline of Apple because the trend that we followed, that was pent up, that was fast, that was tradable, changed on event day when it closed below 503.50. All my lines are taken off, so I'm going to draw them really quick as if this is some kind of technical lightning round. Here is the lower area. Okay, here's your double bottom. Here is when it broke above this mini downtrend that was put intact since February. Here is your gap up. Since earnings, this is really when the trade got exciting for me. Some guys got involved down here. It was a trade down there, but it wasn't something. I think I was on the road to the Hamptons that weekend over the summer. But anyway, this was the pent-up trade that wound up giving us some nice movement through July and August. All of a sudden, peaked out. Weren't sure whether or not it could hold up. Weren't sure what type of event or what type of iPhone we would have. And when you're not sure, you keep your hands on the control keys. And right away, when it broke the stop area, the trade changed. Trade changed right here when it went below and closed below this pent-up area of 503. No longer was it in the game for a potential move above 513. Got out of the way, rightly so. So what now? That's what a lot of people are saying. Okay, today was a strong day. You still have a very big unopened gap. When you have an unopened gap and nobody's buying the stock cheaper, because you could buy it a heck of a lot cheaper than you could have on the close this day, that's showing no demand for it, meaning it could go lower. Today, closing the lows of the day through the low of 464.81. That tells me you should not be owning it. There is probably some numbers that will be coming out this weekend. You could speculate on what it's going to be. Right now, the speculation is going to be that it's not going to be great. As a little common sense point, I was talking to people on my desk. I was talking to people around, and basically, anyone that has the iPhone 5, like I do have, not on me, the iPhone 5, no one's going out and waiting online to buy the 5C or whatever the next phone is. There are people that have the 4S, I got a little late, that might say, okay, it's time for the 5. It's a little faster, more memory, better camera, quality device. But I don't think that they're going on a waiting list or they're going to show up to the Apple store and put themselves on a list the way they did the last few times. So maybe the news around it will be a little bit negative, and I think that's why it's a little cheap. Should close a little weaker here. I am just going home flat Apple over the weekend, and I'll figure out if there's anything to do. And this stock that was on my A list from earnings is now probably on my B- list because I don't see any setup that I truly love. So let's go through other tech names. All right, as far as Amazon, take a look here. It's been a really nice move, since it broke the descending channel here. Okay, two different ways to read this stock. First of all, here was your breakout failure on earnings, telling you it was going to correct. Came in, stopped people out below the prior high here, but then reclaimed it. Here's your descending trend line, broke above it, and now it's trying to flag, letting the 8 and 21-day catch up. Let it hang out above this little level here, and then I do think that we could get a better setup. Here is your day one, which led to a lot more upside. Hopefully you caught it, and now we'll see what the next so to speak, direction would be, or the next trade. It's trying to flag, but sometimes it takes a little bit longer. Google did the same thing with it. Whereas here was holding support, here was your small descending channel here that it broke above, starting above this pivot. Okay, and now it's letting the moving averages play a little catch up. It could use a little bit more time. Looks fair, but this doesn't look like an A setup. Either does Amazon. It needs some time. All right, you go a little bit more into tech land, and you will see. It's not really tech, but look at Tesla, something we follow closely. There's a lot of hoopla about what Elon Musk said about, at this level, it's not crazy to short the stock. It was down a lot after hours, recouped it. This is looking pretty tight. This, to me, is an A play for next week. If it trades above 168, maybe we get another move here. So all in all, it's holding the 21-day still. This trend is very strong and had every reason to break it. It didn't. That still looks like there's a nice setup there. As far as, let's see what else. Some people, I don't know, are talking about Microsoft today. Let's see, what did that do? No wonder. It's, you know, the move off the lows. It did pop up, give you a tiny bit of follow through today. It's now trading above the moving averages. I don't think this is an A play. This is like a B play. Intel, I saw, you know, had a decent day today also. This semi's acting a little bit better as a bottom feeder type trade. I guess, you know, some would draw this like this as a descending little channel here. Broke above, held above, higher high today, showing you, I guess you can tactically try and time some things. But again, this is a laggard play. It definitely has a lot to deal with. Let's see what the SMHs are doing, which is the ETF for that. Look at that. The ETF for the, you know, for this group is hovering near highs. Big gap up above the 821 and all these moving averages. This ETF looks pretty good. So the nuts and bolts of technology, not so bad, even with Apple weaker. So we'll see what that leads to, but that's a positive on the feather in the cap on the bull side. As far as casinos, about 2 weeks ago, I talked about the casinos in the morning call, maybe even more recent, about how WYNN looks good over 141, that LVS above 57, and MGM's just been something I've been talking about all year to put in the drawer, that it could be, you know, 22 by 2014, and I think my estimate for this year was 16 to 18, which it exceeded. So real quickly, you know, you go to WYNN, still looks really good. These casino names, definitely something that has rewarded some investors, and it looks like there's still another trade here. You know, during August when the market pulled in, what did it do? It held above the 8 and 21 days, showed relative strength, broke out, and now you have another flag type pattern. So this could be on the radar for next week for continuation. LVS also very strong. This was your core trade when it broke above this 67. Bob Lang, great eyeball, saw a lot of calls going off, helped with our bullish case. Tried being short here, cute, covered it because it's not pulling in, holding the gap, flagging again. This thing also looks like it's setting up for some higher prices. Could be on the radar next week. And MGM, you know, look at this trend, very strong above the 8 and 21-day moving average, closing at 2013 highs. If you put it in the drawer and kept it in the drawer, congratulations. I think we also spoke about some food stocks this week. Talked about one of my three amigos from 2012, which also was, you know, I think, what was the other two names? It was LinkedIn and Coors. So 2 years ago, said these are my three amigos, new issues, have the ingredients to put in the drawer because they might not trade great, but something that if you're a stock picker and an investor and you take the risk, you keep it in there. If you did so, obviously you don't think equities are dead. Anyway, on a more recent front, we talked about how Duncan woke up and could be a good trade for this week. Ooh, look at that. Was it a good trade? I believe so for some of them that took it. A lot of guys in the virtual trade floor was very happy with this type of move. Nice 3-day move. You know, it came on the back of something like a SBUX that, you know, had a really nice breakout move and also looks higher. Looks like people are drinking coffee, no big fear mongers going up here. Looks like it can continue. That's SBUX. I think we put GMCR on there to see if it can go. GMCR still, you know what? All said and done, hasn't been able to go yet, but still getting tight. Still hovering above the prior breakout, getting tight. Put that on the radar. That same day, I think we spoke about soda. Soda itself, not really a powerful move, but it was right around here. Did trade above this little area and still hanging out good. Sometimes the moves are cleaner than others, but this is at least moving in the right direction. And then today, we came in and talked a little bit about gold. Gold that has been a tradable scenario in a macro downtrend since over a year ago. But, you know, after the blood on the street lows in June, we're like, we could play it to the long side. We also talked about selling the GLDs at like 135-ish. And then today, I know I personally screwed up the trade. I was trying to be long gold because I saw the strength in the miners, and it was the weakness in the miners that got me, you know, a little bit more bearish on it a few weeks back. And you take a quick look here, and, you know, perhaps this leads to some kind of bounce. Okay, if all of you who know the Red Dog reversal know that this is a little bit of a reversal trade. It's below the 8 and 21, which will be resistance, but cute-wise, you know, if you sold here on this major outside day above 30, you have the luxury of, playing some type of counter trend bounce. And then also GLD, which right around here, just so you know, that's when you saw that potent day in the GDX. That's why I bought some puts here in the GLD. And meanwhile, today you had a bit of a red dog reversal. We were talking in the chat room about some people taking it long. I was like, you know what? I'd rather see you take some options just in case, because gold is very random. It's a little bit oversold, so maybe you could see some kind of rally to fill this gap, to retest this trend line, which would be good for the active trader, but overall, a little dangerous here because of how broken this is. You look at the weekly chart of gold and you will see, how basically weak this thing has been since the highs here. Here is one trend line that broke, a macro support that broke, another support that broke, so you had a mini trend or a mini bounce back, and it's still struggling. So you don't want to be too big there regardless, especially if you're looking for a Q trade against the trend, which has been lower. So with that said, next week the Fed meets, and it's going to be a lot of taper talk if you haven't heard. I personally think they're gonna reduce the pace of purchase, maybe 10, 15 billion, but the market's probably taking that in stride. I am looking at this gap that we have here in the spiders, which you could see, on the daily chart, we're holding above. So if this gap stays intact and they can't do some kind of outside day like you saw here on this Fed meeting, we're going to be seeing, in my opinion, new highs here, probably before October. If we create some kind of push-through failure where it's extreme and potent in this area, you will hear some double top talk, and then maybe we correct a little bit more, and then we see what happens. But ultimately, in my humble opinion, you see China getting better, you see Europe getting better, you see world markets getting better, you see some effects of QE actually working besides some of the negative data this week. I do think it's a matter of when these markets make new highs. If it happens to be in the next 2 weeks, you will see the pain trade continue. That means people are underinvested and they've been shorting this market without a plan and just rolling it up. You'll see the pent-up action, which we saw back here. For me, this was a tough little time period. If you go to the chart, when you saw a really nice move, I was very bullish coming into the year on this gap up, rode this rally well, and then this last part of it just got me a little bit uneasy, okay, before the corrective activity. So here we are. We made a new move, new highs after that, and now we're hovering right here. I'd love to see sideways for a few more weeks, or even sideways to down a little bit before going, but the market's not going to give you what you want to see. So at this point, we have a level to trade against on an intermediate basis. You know where the highs are. Hopefully you don't have too many opinions. You've been trading the action because the action has been good. And hopefully you don't listen to the fear mongers who've been saying the equity market doesn't work, because it does. You just have to approach it the right way. It's been a long week. I wish you the best. If you're fasting tomorrow for Yom Kippur, which I am, I hope you have an easy fast. And if you want to watch the football games, it's week 2. Enjoy, and I hope your fantasy football team scores a lot of points. See you Monday. Have a great night. Scott Redler, T3 Live, the recap. Have a nice weekend.